Hey everybody, Jake here, TrendSpider, to go over the weekend video update into the last couple days of the month of January, and it has really been a crazy start to the year and kind of a status quo changing start to the year, if you will, with some pretty interesting breakouts this week on some of the bigger names and bigger indices. So we will go into SPY, QQQ, IWM, and Bitcoin for the broad markets, and then we'll touch on 5 individual names going into the week ahead. Starting with SPY, one of the biggest things with SPY and other names in the market as well is really this breakout that we finally have, pretty much starting back from the all-time highs here back in January of 2022. So pretty much this diagonal trend zone originating from the top here, we finally broke above it. So that is something we have not been able to do pretty much since this bear market started. So that is definitely something to keep an eye on going into February. And you'll see here that we did break out on Thursday and Friday. So if I zoom in here into kind of the more of the apex of the setup, you'll see here that we broke out and we barely missed a retest of the bottom of this zone, pretty much which was resistance from September and then early December and then mid-December as well. So kind of this main zone, anywhere from around 409 up to around 411.50 is going to be a pretty important area to get through if we do want to continue up from here. So that is the main thing that I'll touch on first. The second thing I'll touch on pretty much is essentially what's called an envelope. So if you just type in SMA, or you don't even have to do that, you just type in envelope, and you add, you can see here the length, we're just looking at the 200. So we want to look at the 200 day SMA, and I'm going to add a 3.25% width percent. So that it's essentially like the same type of thing we use for the anchored VWAPs. So when we create the anchored VWAP and we create a zone, we're essentially using the same type of theory here. So the reason why I did a 3.25% is essentially because you can see here back and I'm just going to delete this just to make it very simple for everyone to see. You'll see here back in January, February, and then March of 2022. So this area here, and then this area here. You can see that all of these instances, we could not get back above the 3.25% area. Now, if we used kind of the default, the 3%, we would have had a couple false signals here. So to try to avoid false signals, I kind of added that 3.25% to capture this price action that we saw early last year. Now you can see here that we did reject right at the top of this envelope again today. We did not close above it. And what's really interesting is anytime we have had a close above this envelope, anytime that we've really broken down in the past, this has been kind of a signal for new all-time highs to come. And really what's interesting here, notice here, this is what we saw back during COVID. We originally broke down through this envelope. We moved down, hugely down through it. We started to move back up into it. Once we finally got that daily close above the envelope here, we did not break back below this envelope until we hit new all-time highs. And we continued to move up, to new all-time highs for quite a while after that. But if you go back and look, pretty much even since, the start of the new bull market back in 2010, 2011, or mid 2009, anytime that you've had this breakdown, so essentially you break down, you close below the envelope, and then once you get the daily close back above it, you do not close back below this area until new all-time highs are hit. So the point of this whole thing is, if we do close above this area, and you consider what's happened in the past, if we close above this area, we could definitely be potentially in for a bigger move to the upside, possibly, riding this moving average envelope back up until we hit all-time highs. That's what's happened in the past. Obviously, we're in kind of a different market environment, so you have to consider that by no doubt. So just something to think about. We did reject off this area. This envelope is something to keep in mind going into the month of February for sure. Now, as price is starting to get above this, and if we potentially start sustaining price action above this 200-day SMA, we could see the SMA starting to flatten out and actually start increasing again, and that would definitely be a big bullish signal as well for market participants. So I know that kind of took a while, but this has been a chart that I was sharing on social media over the last couple weeks. So I did want to explain that envelope, how I came up with that 3.25% and what exactly that has entailed in the past. So definitely something to consider. Notice here as well, if you look at the envelope, the 200-week envelope, notice where we bottomed here for SPY. We bottomed right at the bottom of that 3.25% envelope. So definitely something to consider if you've never played with the envelopes before. A lot of the time, 3% is your default. So for example, if you close back above the 3%, or back below it, you're kind of changing trend. Now, on the weekly chart, we did break out of this descending diagonal resistance zone on the weekly side of things. So obviously, we broke through it on the daily, but you can see it here a little better. We actually had a weekly close above this area too. Inverse head and shoulders seems to be playing out still. So all in all, it's really hard to be too bearish here. I mean, generally, if you're getting a breakout, you get a retest of your breakout area and continue up. So we'll see if that does happen going into the month of February. Now, going into the Qs, pretty similar looking setup here. We've got this weird wick here on the Qs that I'm not sure kind of what that is. But if we go to the session candle, generally those wicks will kind of go away. We even saw it here on the session candle. So not exactly sure what this wick is, but I did want to mention that we do have a breakout here as well on the daily chart above this descending resistance zone. And if you turn on the SMA 200, so the 200-day SMA here, where are we? Right here. We are once again above this area. So, we did have a little bit of that fake out in February and March of 2022, but you can see here that, so far we are closing above it. Now, on the weekly chart, you'll see here that we do have kind of that wick showing as well. So sorry, guys, for that. I'm not sure exactly where that is coming from. I don't think that was a print today. I do these on Friday. But you can see here that, if we did actually continue up and as we did close on the weekly chart above this resistance zone, if we did continue up, the all-time high VWAP zone would be an area of interest above, anywhere from around 318 all the way up to around 325. So definitely, if we do continue up, that would be your area to watch. A lot of the time, you do get some stalls before we just go straight up. And a lot of the time, as I mentioned in the previous chart, you get a retest of your previous breakout zone. So a retest of this red zone, possibly coming in the next week or two. We'll just have to see what happens. But once again, apologize for that weird wick that we're showing here on the Qs. Now on IWM, this is a great example kind of going into what we just talked about, SR flips. So if we start on the weekly chart, a couple weeks ago, we were talking about price finally breaking out of this diagonal resistance zone, possibly leading the markets, and that's exactly what has happened. And look what happened here. I mean, exactly what could potentially happen for SPY and the Qs into the week or two ahead, where you have your breakout, you retest, here's your SR flip, previous resistance now acting as support last week for IWM, and then we had new highs again this week. So all-time high VWAP zone would be your area to watch for IWM. That's anywhere from around 193 all the way up to around 197.50. So definitely has been an area that we've reversed in the past during these bear market rallies. So we'll see what happens if we do continue up into this zone into the next week or two. Now on the daily chart, you can see this previous area, this area from September and then November and December that we discussed on the last video is once again acting as I don't want to say resistance, but acting as an area where price is stalling once again. So you can see here, you broke out, retested the resistance zone area, continued to make new highs, and retested this previous zone. We did not close above it, so that's something to consider going into the week ahead. But really, this wall up to around 190 is definitely an area you want to close above to start the next leg up. BTC USD, we're going to look at Bitcoin here on the daily and the weekly chart. You can see here on the daily chart, we've kind of got this confluence of this previous resistance that we saw back in August of 2022, and then also the March 2022 VWAP zone. You've got this area here that's kind of pretty much from 23.5 all the way up to around 25. And, you know, I know that's a big range, but it's Bitcoin, and Bitcoin generally can have some pretty crazy wicks. So pretty much anywhere from 23.5 all the way up to around 25K is going to be a very important area to close above. Until then, we're just kind of trading right at this resistance zone. And then you can see this a little better on the weekly chart. Here's your March 2022 highs. This was a pretty crucial pivot in the market before the next leg down. And you can see here, this is an area that we are having trouble getting above, at least for now. We'll see what happens. And if we close above that zone, then that's when we would take another VWAP zone from the all-time highs. And then that would be anywhere from around 30,000 up to around 31,000. So we don't want to get ahead of ourselves. So for now, the March 2022 highs, pretty much the March on the weekly chart highs are where we're anchoring the VWAP until we get above that zone, the top of that zone, which is right around 24.8. Just kind of trading at resistance. Going into some individual names, we'll start with Apple. Apple's looking pretty similar to all the kind of the major indices here. So we did break this diagonal resistance zone. One thing I would do is add volume by price. So if you look at volume by price, you'll see here that we essentially have this volume gap that we moved through on Friday, and we were able to move up pretty quickly here. So, anytime you don't have a ton of liquidity, price is able to move up very quickly. You don't have a lot of friction for price. So if we did continue up next week, your area above from around 148.50 all the way up to around 150 would be a pretty heavy area of supply to get above. Now on the weekly chart, the COVID low VWAP has held. We've pretty much gone straight up the last 3 weeks. And if we continue to move up, there's definitely still some blue sky above until we get to this resistance zone in the 160s. So definitely a lot of things need to kind of play out here to get a continuation up that high and to be almost near all-time highs again. But, we already broke out of this pretty much, as I mentioned, this diagonal zone originating from the March highs. So, that would be the main zone above that I'd be watching. And then, if you want to use some basic horizontal resistance support, I would just look at this basic area here. Previous support, broke down, broke out, and then back in October, this acted as kind of your resistance area before new lows. So, anywhere from around 150 all the way up to around 154.50 would definitely be also an area on the weekly chart to take a look at from a horizontal zone level. Going into Tesla, this thing's been absolutely crazy over the last pretty much the whole the last month or so. Main thing that I'll mention here, and I'll take off the VWAP or the volume by price. Your September highs VWAP zone was an area of interest, possibly for reversal. Price completely ignored that and just continued to move right up. So all in all, this move seems a little overextended. If you turn on the gap snake here, pretty much the automated gap detection, you'll see we have 3 gaps below now. Those gaps don't have to fill anytime soon. You can see here that we also have a gap above around 250, starting around 258. So, all in all, we'll see where price gravitates to. But, this has been a pretty impressive move. And, we'll take a look here on the weekly chart, and we'll kind of go over just the simple signal earlier this year, or even late December, early this year, where, if you just turn on the RSI 12, so that's the 12-week look back, so, essentially the quarterly RSI, this was the 3rd time in history of the stock price for Tesla that we were below 30 on essentially the quarterly RSI. So this has played out essentially exactly how it did during 1 and 2. Actually a bigger move than we saw during 2. So, definitely kind of a V shape going on here for Tesla. We are getting towards an area of potential resistance here, this previous area of support, and then support back in March of 2021, in May of 2021, acted as very temporary support back in November, and now we're right back there, acting as potential resistance going into February. So all in all, very impressive move for the first start. For pretty much the start of 2023, the first month of 2023 was just absolutely nuts. And so congratulations to those that bought the dip on Tesla. Going into ENPH, one that's not looking too good. And this is one that we also looked at. We looked at the MACD cross in the last video. We did have a continuation up for a couple days after that. Pretty much that Monday and Tuesday, we had a nice bounce, and then we continued to hit new lows. One thing I'll point out here on ENPH is this gap below. So this gap fills right around 195. You can see that on the daily chart here. And then on the weekly chart, you'll see we have this kind of ascending wedge, this rising wedge that finally broke down. So not a great looking chart here, at least in the short to, or let's say, I'd say short to medium term. Long term, we'll see. But, if we just anchor a VWAP from the bottom of this zone, this is way down here at 132. So that means like the average kind of dollar cost average for any share bought since November of 2019 is way down here. What does that tell me? It tells me that there's still, the average share that's been transacted since 2019, or the low in 2019, still has quite a bit of profit. So shares have profit, people can sell for profit, that adds to supply, and that creates prices to fall. So not saying we get all the way down to the 130s, but this is kind of where I would anchor a VWAP, the start of this uptrend, and the fact that we are breaking down doesn't look incredibly bullish in the short to medium term. But remember, SR flips go both ways. You break down through support, retest support as resistance, and then continue down. We'll see if that's the case for ENPH. Next one we'll look at is Oxy. Oxy is one that's kind of all over the place. You've had some crazy moves on this one. One thing I'll mention here is we do kind of have this very subtle downward broadening wedge here. We did not close above it, so that's something to keep in mind going into the week ahead, that we did reject exactly where you'd expect and did not actually close above this area, even though we broke above it intraday. And then you can see here on the weekly chart, you've got this ascending triangle starting to form here. And we're still pretty much early on in that. So, we could easily just trade around here and trade within this area for quite a while. Who knows, maybe like half the year. This would definitely be the area, at least on the longer term chart, that I'd be watching to see which way price finally breaks, whether it's to the upside or downside. We will continue to watch it and see where it goes. Last one is Microsoft. Microsoft kind of started us off in earnings season, and we finally got above the break-even supply zone that we were talking about last video. So if we anchored the volume by price from these highs, essentially measuring where has volume occurred since the August highs, a majority of that volume was from around 240 up to around 245, acting as initial supply. But then as price got above it, this volume shelf kind of acted as almost a launch pad for price on Thursday and Friday, and we are finally back above it. And if you anchor VWAP from the all-time highs here, you can see that we're kind of right at the, let's see, we are, so this takes the previous time I used it. So to be honest, the anchored VWAP from the all-time highs, or sorry, not all-time highs, the August highs haven't been too meaningful. You can see price not really respecting it, especially back in November and December. So that would kind of be an area to watch, but it's really not showing any significance here with price respecting it. Now, all you need to do is really just take previous resistance, or take this from the August high, connect it to this point, extend it. So then this area would be probably your more, accurate area to watch. So pretty much this descending resistance line. Notice that this has not broken out yet, like SPY, the Qs, Apple. So definitely something to consider, that Microsoft is kind of lagging some of the bigger broad market moves here. So all in all, price is above the volume shelf. That's something to definitely consider for the bull case. But the bear case, we are still below this downward sloping resistance zone originating from the August highs, and we'll see how that plays out into the week ahead. And then on the weekly chart, you've got pretty much a bigger resistance zone above that starts anywhere from around mid 250s all the way up to around 265. That's assuming if we went straight up next week. Remember, the longer price takes to move up, the lower the price will be on any descending trend line. So if we went straight up next week, upper 260s would be the thing to watch. If we did something like this where we went up, down, like this, and then went up, then all of a sudden your resistance is at 252 or around 252. So just remember, at least for diagonal zones, just go week by week. So for example, next week, draw a little candle here and say, okay, pretty much next week up to 263 is, where resistance is going to be. If it takes, let's say that we don't get there and, we wait another week and then we draw like something like this, it's going to be closer to 261, 262. So just remember, these trend lines are a function of time. These are not static levels. They change as time changes, much different than basic horizontal levels. That is all I have for the weekend video. Hopefully the weekend video was helpful in getting a new perspective, maybe a couple different charts that you have been looking at but didn't see them the way that I showed them. That's really a big part of the reason we do this, is just to show a different perspective in the market, maybe a different way that you're not seeing it, or maybe a different view that you're not seeing, maybe a bullish view that you didn't see and when you're bearish. So really hope these videos help with that. Remember, if you do like the videos, like and subscribe. We do these about every 2 weeks. And if you do want to give TrendSpider a shot, we do have the link in the bottom of the description of the video that you can check out TrendSpider in kind of more detail, some of the different features you can try. And if you have any questions, just reach out to us on Twitter @TrendSpider or hello@trendspider.com, and we're happy to help. Everybody have a great weekend, and thanks for watching.